guys, welcome back to my channel. So today is everyone's favorite topic, of course, order block. So I'm going to show you an order block that has trading range alignment. It's in a redistribution with major unhealthy price action. So these things are major confirmations when it comes to trading, you guys. So you need to know what your confirmations are. Of course, I go over that in my academy. But even if you're not in my academy, you guys, make sure you have a confirmations checklist. Now, it's one thing to have a checklist and one thing to use it. If you have 10 items on your checklist and you're missing 2, don't take the trade. You need to make sure you're looking for high probable trades. So I'm going to show you guys on this setup on GU that I took last week, how this is a high probable setup and how you guys can find similar situations in the market, okay? First, I'm clearly in a downtrend, so the structure shouldn't be an issue in the situation. Now, what you guys need to understand is expansion and contraction or consolidation, and then the market expands again. So when you're in a trend, you're expanding, consolidating, expanding, consolidating. So realistically, you're not in a down push like this. You can't have a schematic because this is just a push down. There's no consolidation. And a schematic is pretty much when the market pauses and you kind of can say consolidate or reconsolidates itself to continue in that direction or in a different direction if it's choosing to do so. So once the market is falling, then we're going to get pretty much preliminary supply. So pretty much what that would be is the market stops falling. So if you're reading the Wyckoff book and you're actually reading the definitions, and if you only read that book once or twice, then you need to go back and read it again. It's not something where, this is not a crash course, you guys. You guys need to keep going over and over, even if you've been trading for 3 years. So I noticed the market slows down, right? I start getting 3 drives up and some drives down, whatever those drives are. So then I just start labeling you guys. I don't want to say it's easy. It's not easy, but when you're working with me or a team of people that are doing this on a daily basis, it gets easy to notice certain situations. So before I even notice candles, I noticed that the market stopped dropping. Like obviously there's no schematic in here. And then I'm getting pushes up and pushes down, which I know is going to be, UTADs and MSAUs. So first I'm just going to label my highest point and go down the ladder. So I like to start high and go low. So I could use bodies or wicks. So if I'm using bodies, then this would be my my BC. If I'm using wicks, it would be this. So I'm going to show you this as wicks for an example first. Okay. And then I'm going to come here, and this may not make sense because if this is my BC, this would be my AR, right? So if that's my AR, then what is this? So this can't be a PS because it's lower than AR. Right? Sorry, this wouldn't be a BC. This would have to be an AR. We're looking for an AR. And I'm not going to edit that out because this is what happens when you trade. Sometimes you have to go back and forth. So, okay, so this would be an AR. Right? There we go. That's what I meant to say. And this would be a selling climax. Now, if we're doing wicks, well, this wick is not lower than this wick. So there's no way this is like a selling climax and we're just going to ignore this. And sometimes people do that, which is not good. You have to use all the data given. So that's not going to make sense. And as you guys just seen, like you make trials and errors. So I'm going to move this as my AR and recognize this as my selling climax. And I'm going to focus on the bodies. So I'm going to ignore this wick. I'm going to use this body. This body's my AR. This is my UT. So I'm going to throw this little bad boy right here as a second test. And I'm actually going to move the label because I take where I put my label seriously lower than the AR just because we're focusing on the bodies. And that's something where also my academy is very strict about where you put your labels. Because if you're putting your labels like 3 drives up, but it's not, you're just going to confuse yourself, okay? And then we're going to throw a little PS on here because this is when it literally stopped selling. Okay, so that's our start. Now, after we do that, before we go to the MSAUs and whatnot, let's draw our trading range alignments. So in my trading range, I always make dash just to identify that it's a trading range and not anything else. And I'm going to take this here. Now, with this is literally how I marked it up, you guys. Like, I don't know, I love showing you guys what I do. This can be a second test too, since I actually tested the trading range. So let's just throw that in there. ST. And everything I'm showing you about how I mark up is very particular, like all the time, you guys. Actually, let me throw this up here since we're talking about bodies. Making sure that the ST is represented to be higher than the SC. Okay, cool. So then I seen this, you guys. I seen price literally going through this as an order block. This was like this was an easy setup for me. I don't like saying easy because I don't want to be ignorant, but this was an easy one for me. So MSAL, okay, we have an MSAL, minor sign of weakness, and then this drop right here was a major sign of weakness, you guys. Now, notice that we have unhealthy price action, meaning that price dropped off, did not return, and it continued making new lows. Like, the order flow here was so beautiful, like, it was crazy, you guys. So this is literally the setup that I had, okay? So what we do, throw a risk to reward on it, 50%, already at 50%. Like, the market does market things when you're trading the right way. Okay, so we have a nice 6.3, and we're gonna try to get this to this current body right here, and that is a 10.57. If you guys have any questions, put it in the comment box below. Also, if you guys have questions, I need you guys to drop the time. Like, because I don't know what you guys are talking about. So if I've ever skipped over your comment, it's because I don't know what you're talking about. You're like, oh, that candle did that. I don't know what that means. So if you have any questions, drop it in the comments. Now, before we watch this play out, a lot of you guys want to know the truth about trading, Smart Money Academy, kind of all these things about trading. And I have a free webinar that's going to explain to you guys everything you need to know about smart money concepts and Smart Money Academy, because a lot of people want to know like what's different from your academy, what's involved, and all that stuff. So I have this free webinar that you guys can sign up. Also, it will talk about, you know, how to get success with smart money and what we really do here and the truth of trading. Like, honestly, we all know that trading is hard and complicated, and you never know if you're learning from someone valid. Here, I want you guys to focus so much on learning the skill, and that's why I have so much value on my channel. And I think, you know, sticking to my channel for even 1 year of just straight learning with Smart Money Academy on YouTube, and we have videos every single week, and taking those notes and applying it is a really great place to start. So if you guys understand what it's like to do real trading and you want to get some more information, because I did put value in this webinar, few tips on order blocks and how to find it like you're getting in this video, but a little bit in different detail. So you get free education, guys. The link to the webinar is in my bio. I already did this webinar. You guys can watch the replay. I did this. If you're on my email list, you may have already seen it. If not, you can just sign up in the link in bio of this video. And now let me show you guys how this trade plays out. All right, so 50%, 1 to 10, you guys, this is all we do. All we do all the time. There's no way I'm gonna need a 20 pip, 15 pip stop loss. The market does market things, you guys. It's not gonna go up for 30 random pips for no reason. If you're trading like the institutions, they have a destination where they have to enter and exit the market. Now this trade gets crazy. Ready? Take profit smash. Now watch. Boom. And then it continues going down. So take profit is major key. I often complain about my students take profit. I'm like, no, that's not the right take profit. And it's very serious, because even though we're doing 1 to 10s, like, say you have like a 1, like say this wasn't a 1 to 10, it's a 1 to 9, and you stretched it down, and market hasn't been there before. If this didn't happen and price turned around, then you may have lost this trade, right? Like, guys, if you went break even and your take profit was wrong, or like you overstretched your stop loss, meaning that you would have to then change this, then you wouldn't have been in the trade, especially if you went BE. So all these details are important. All these confirmations are important. I got a comment saying, oh, do you use trading range alignment, or did you change your strategy? No, not every trade has trading range alignment. It is my favorite, one of my high confirmations, but all these little steps I teach you guys are confirmations. So if we have 13 confirmations, you need to have 11 to take the trade, right? Here I have pretty much every single confirmation, right? I have the trading range alignment. I have the unhealthy price action. I have the risk to reward. I have every single element. I have everything, so I can take the trade. But if I'm missing trading range alignment and this is not unhealthy and it didn't kind of break this low, if it just kind of like retraced already and, retraced already and then sold off without trading range alignment as well, I probably want to take this trade. So I go over all these confirmations, of course, in my academy. But I hope you guys got value from this video. Thank you guys so much for watching. Don't forget to comment, like, and subscribe. And I'll see you guys in the next video or in my free webinar.